Income tax. Imagine every time you get your allowance, you give a small part of it back to your parents because they help you with food, a place to live, and other needs. Income tax works similarly. Both people and companies give a part of the money they earn, like your allowance, to the government. The government uses this money to pay for things everyone needs, like schools, roads, hospitals, and police. The amount you pay depends on how much you earn. The more money you make, the more you contribute. This helps ensure that everyone gets a fair share of services, and those who earn more help cover more of the costs. Value-added tax, VAT. Value-added tax, or VAT, is like a game of tag, but with taxes. Every time a product is made and sold, a little bit of tax is added. This happens at each step: when it's made, when it's shipped, and when it's sold in a store. So, if you buy a toy, there's tax included in its price that has been added at every stage of its journey from factory to store. This tax goes to the government, which uses it to fund public services. Unlike sales tax that's only added once at the end, VAT is added a little at each step, but the total tax burden is similar. Click subscribe to this channel to get more topics you love. Sales tax. Sales tax is a bit like a tip you add at a restaurant, but this tip goes to the government. When you buy something, like a new game or a bike, the price you see isn't the final price you pay because there's a sales tax added at the checkout. This tax is a percentage of the sale price, and the rate can be different depending on where you live. The money collected from sales tax is used by the state or local government to help pay for community services like schools, roads, and emergency services. Property tax. If you own something big like a house or a big piece of land, you pay a property tax. This tax is based on how much your property is worth. Every year, the local government decides a rate, and you pay that percentage of your property's value. The money from property taxes is used for local services right in your neighborhood or city, such as schools, parks, and local police. It's like paying for a membership that keeps your community nice and functioning. Capital gains tax. Capital gains tax is a tax on the profit you make from selling something for more than you bought it for. It's like if you bought a collectible toy for $10 and sold it later for $20. The $10 profit you made would be taxed. This tax doesn't apply to everything you sell, mainly things like stocks, bonds, or real estate. It encourages people to think carefully about investing and selling because the tax can affect how much money they end up with after a sale. Estate tax. Imagine if someone has a treasure chest full of gold and when they pass away, they leave it to someone else. An estate tax is like a fee that the person who inherits the treasure chest has to pay to the government before they can claim it. This tax is only on very large amounts of money or property that are passed down after someone dies. It's a way for the government to ensure that extremely wealthy families contribute a portion of their wealth to public funding, which can help reduce wealth inequality and fund essential services. Inheritance tax. Inheritance tax is similar to estate tax, but with a slight difference. While estate tax is paid out of the deceased's entire estate, inheritance tax is paid by the person who receives the money or property. Think of it as receiving a gift that comes with a responsibility to pay a part of its value as tax. This tax also helps in distributing wealth more evenly across society and supports public services. Tariffs. Tariffs are like fees that countries charge on goods coming in from other countries. If you bought a toy made in another country, tariffs could make it more expensive. This is because the government adds a tax on it when it enters your country. The idea is to make imported goods more expensive so that people might prefer buying local products, which can help local businesses grow and create more jobs. Excise taxes. Excise taxes are special taxes on specific goods like gasoline, cigarettes, and alcohol. Think of it as a special price added to things that are either not good for your health or the environment. By making these items more expensive, the government hopes people will use or buy them less. The money collected from these taxes often goes towards related services, like healthcare for smoking-related illnesses, or for environmental cleanup projects. Payroll tax. Payroll tax is taken directly from your salary before you even see it. This tax goes towards important things like Social Security and Medicare in the United States, which provide support for elderly people and those in need of medical care. It's a way of making sure that everyone contributes a little bit from their earnings to help take care of each other, especially those who can't work anymore or are sick. Corporate tax. Corporate tax is the tax that companies pay on the profits they make from their business. Just like you pay income tax on the money you earn, companies pay taxes on their earnings too. This helps the government raise money for public services and infrastructure, which in turn helps the businesses because they need roads, ports, and services to operate smoothly. Carbon tax. A carbon tax is charged on the carbon emissions produced by burning fossil fuels. It's like a fee for polluting the environment. The idea is to make it more expensive for businesses and people to use fossil fuels, which encourages them to switch to cleaner energy sources like wind or solar power. This tax can help fight climate change by reducing the amount of greenhouse gases that are released into the atmosphere. Wealth tax. Wealth tax is a tax on the total value of personal assets, including money in the bank, real estate, and sometimes even expensive things like yachts and jewelry. This tax is aimed at very wealthy individuals to help redistribute wealth more fairly within society. It's like asking those with a lot to chip in a bit more to help fund public services and support the community. Stamp duty. Stamp duty is a tax that you pay when you buy a house or shares in a company. It's like a fee for making the transaction official and getting all the paperwork sorted out. The cost can depend on the price of the house or the amount of shares you buy. It's one of the ways governments can raise money from activities that involve big purchases. Sin taxes. Sin taxes are extra taxes on things that are considered bad for health or for moral reasons, like tobacco, alcohol, and even sugary drinks. The idea is to discourage people from using these products too much because they can lead to health problems. At the same time, the money from these taxes is often used to pay for public health programs and other community health initiatives.